Okay, the first indicator explanation that we're going to go over is the three moving averages. So I want you to go to the settings icon, and I want you to uncheck the EMA2, and I want you to uncheck the EMA3, which is the 30-day moving average and the 200-day moving average. We're just going to focus on the 7-day moving average currently, and then click on OK. So right now you see the green line. Right now I want you to double click on the black space so you can enlarge the area. So now we just focus on the one indicator, which is the price, and the green line that you see, which represents the 7-day moving average. Right here on the screen, Wednesday, August 17th, basically the price, the green bar, is above the green line, which is the 7-day moving average. It always comes back down and tests that line no matter what. If it closes below the line, you know the stock is in a bearish trend, and if it closes above the green line, that's how you know the stock is in a bullish trend. So currently you see right now that as we're following this green 7-day moving average, the stock is in a bearish trend because it's closing below the green line. And then right here you see that the stock start closing above the green line. Anytime it's closing above the green line, you know that it has to start coming back down to test it. Anytime it's below the green line, you know it needs to come back above the green line. That's just the way it works, like a roller coaster. As you see right here, it's chopping up above the green line, kind of indecisive, and then it breaks down, and now it's closing below the green line. Then right here, it finally breaks above the green line, and it continues to stay above the green line until around, I would say, March time frame. And as you can see, Apple is currently around 186, and the 7-day is around 178, acting as support at the moment. So the next thing that we're going to do is we're going to add the 30-day moving average, which is the yellow line. So we're just going to go to settings, go to style, and we're just going to re-enable the EMA2, which represents the yellow 30-day. Now you need to think of these EMAs, these lines, as support and resistance. The green line, which is the 7-day, is going to be your main line that you're going to pay attention to because it's a 7-day moving average close to the price action. The yellow represents the 30-day. So as you can see, the price touches and then the 7-day breaks below the 30-day. Anytime there's a big gap between the green and the yellow, which is the 7 to 30, that's a good buying opportunity because usually from there, the green line usually touches the yellow line, or the price touches or exceeds the yellow line, which it just did in this example right here. Then from there, it broke down, went back up, broke down, and then ever since then, Apple has only been testing the green line, which is the 7-day, as support, and it hasn't touched the 30-day support since almost the beginning of 2023. Now we're going to enable the 200-day moving average, which is the EMA3. And this one is the mother of all support and resistance. Anytime you see the price is above the 200-day, you know it needs to test that 200-day again in the future. So the price needs to come back down to touch that line. Did it do it in this example? Yes, it did. Between October and November time frame, it went below the blue line, and then the blue line acted as resistance before it dropped down even more. And then once it dropped down even more around 2023, as you can see in this example, 2023 is when it dropped below the 30 and it dropped below the 200-day, and there's a big gap between both of those. That's an extremely good buying opportunity because, like I said, you know that the green line has to test the yellow and the blue, and that was a good opportunity to buy in. Once it broke the resistance of the blue line, which is the 200-day, the blue line acted as support, and then from then on, Apple has just been on a rampage from then. And right now, the 200-day is around 155. The 30-day is around 170, and currently we're around 186 all-time highs. So if the price ever needs to retrace back down, you know the yellow and the blue are two good guidelines for a good price area to place your bets. And in this example, this is for a motor company. And if you look on the left-hand side of the screen, the bottom, the price is around the 7-day, and that which is a good buying opportunity because the yellow and the blue is above it. If you would have bought right there around August time frame, it shot up past the yellow, all the way past the blue, and then it dropped down. From there, it went back up to test the blue. Then it broke down. There's another gap between the 7-day and the 30-day. Like we said, anytime there's a nice gap between the 7 and 30, it's a nice buying opportunity. It went up, and then the blue line, which is the 200-day, was resistance. It touched the 30-day for support, and then it tried the blue resistance again. Then it dropped down below the 30-day, which is a good buying opportunity. Once it dropped below the 30-day, it tried to test the 200-day. The 200-day acted as resistance, and basically it went down below the 30-day, but not that much. Then it went down below the 30-day again, but not that much. But there's still a gap. Bought the gap. The price broke past the 200-day finally, and now we're trying to test last year highs. And that's usually how you just read that one particular indicator. That's how I do it. I make the lines seem like support and resistance, and then I try to buy on the gaps between when the 7-day breaks below the 30-day, and there's a nice gap. That's a good buying opportunity. So now if you double click on the black part of the screen, you'll bring all your indicators back. And now the next indicator that we're going to focus on is the Dread Blitz Bollinger Band indicator that we added. So once we're there, we're going to double click on the black part of the screen so we can bring that and make that full screen. Now the first thing is this green line. This green line is basically meaning the price is going up in price. That's what the green line means. Do you want to buy on the green line? No, you want to buy before the green line. So you want to buy either on the red or on the transition. The sky blue line is the transition line. That's when you want to wait and be patient, which I have a hard time doing. Once it's green and it goes through a transition, it can go green again or it can go red. But in this example, it went from a transition to red to another transition, then to green, as you can see right here. Once it went all the way up to green, what happens after that? Another transition. Then once the transition happens, that's when it turns red. So in that case, you want to buy a put on the transition at the top. And then down here, once this go from red to another transition, you want to do a call, meaning that the stock is going to go up in price. And that way, the green line goes over. Then what happens? A transition happens. Maybe you need to do a put. Do a transition. It goes red. From the red, another transition happens. Then it goes green. So it's like a roller coaster. It's like a pattern. That's basically how it is. The green area represents the prices going up. The sky blue line tells you that there's a transition happening. Either a transitioning, meaning that it's about to go lower in price, or a transition that is just about to continue up. So you see these yellow horizontal lines across the screen. I'm going to explain that. That's basically what I like to do to kind of give me an indicator on if I should buy it, if it's a good buying opportunity, or if it's a good put opportunity, meaning that the price is going to go down. So that's what the 0.5 and the 0 line is for. In this example, we're just going to do the 0 line. So we're going to do Alt H to draw the horizontal line. I'm going to delete mine so you can see what it looks like. Click on it, hit delete. Now go anywhere on the screen and hit Alt H. It's going to bring horizontal line. You're going to click on it, click on settings. For the style, you can turn it to any color. I like yellow. So go to coordinates, just hit 0 and then hit OK. And no matter where you put the line on the screen, it's going to go down to the 0 line exactly where you need it at. And then once it's here, you can look at the Bollinger Band, and now you can see, is the Bollinger Band below the 0 line, or is it above the 0 line? If it's below, it's a good buying opportunity. If it's above, it's a good put opportunity. So now in this example, I want you to hold Alt V So you can draw a vertical line, and I want you to put a vertical line on all the areas where you think there's a good buying opportunity. And in this example, I'm going to make it sky blue, and I'm going to put all the places that I think are a good buying opportunity. And I want you to do the same. I don't want you to really copy me. I want you to look at the particular asset that you're looking at, and I want you to put these vertical grid lines by holding Alt V on the areas you think are good buying opportunities. Like I said, good buying opportunities are when it's red at the end of the red, or when it's transitioning from red to the sky blue transition color. Those are the good buying opportunities. And I'm going to number them 1, 2, 3, 4, 5, 6. So for this particular asset, which is Ford Motor Company, looking at the 2-day chart interval on this Bollinger Band indicator, I found 6 buying opportunities. Depending on the asset that you're looking at, maybe you found the same, maybe you found less. It all depends. If you're looking at this example, which is Ford Motor Company, and you're also looking at the time frames that I have, you should have the same. So it doesn't matter too much if you're looking at the same asset or a different asset. You want to follow these fundamentals. Once you're finished numbering, or you don't have to number these, once you finish with the vertical grid lines, all you're going to do is double click on the black part of the screen so you can bring in all the indicators so we can take an overview and see if these vertical grid lines would have helped us purchasing this particular asset at very good times. So this one right here, July 1st, that was a good buying opportunity. From there, it broke from the 7-day, broke the 30-day, and broke the 200-day. Then it went back down. We bought again. It broke the 30-day and the resistance. We bought on the 4th line. We bought on the 5th line, 6th line. So that right there just shows you, without even looking at the price chart, if you look at that Bollinger Band and you uh, plot those vertical grid lines on those key areas, sometimes you don't even need to look at the stock to know when it's a good buying opportunity. Now that we got all that stuff deleted, now we're going to go to the last indicator that we added, which is the Bollinger Band percentage icon. Um, Here, I'm going to explain what the blue area represents. The blue area represents the water. Think of this line as a whale. Anytime it's in the water, it's a good buying opportunity, but also it means that the stock had went down previously. Good buying opportunity is see those dips. Those are good buying opportunities. The green line, the green shaded area, anytime the whale jumps out the water and you see that little red little line, that shows you the height of the whale, and now the whale has to go back into the water. So it's kind of like I said, like a roller coaster. Or you want to think of a whale in the water and then jumping out the water back into the water. Buy when it's in the blue, sell when it's in the green, or do a put when it's in the high green area. Those are basically how I use this indicator. Now you want to draw a horizontal yellow line, Alt H, to make the horizontal yellow line. And then by doing that, that even helps cancel the noise. Another horizontal line that I like to use is the 0.5 line. So I have the 0 line and the 0.5 line, and that kind of gives me my support and resistance. Anytime it's above the 0.5, I know that the stock is in a bullish territory, but I shouldn't be buying it when it's above here. Anytime it's below the point 0.5 and it is either below the zero line or just came from being below the zero line, that's a sign of a buying opportunity. So anytime it's in blue, buying opportunity, green, a put opportunity. And for the same thing, you could put those vertical grid lines. So put vertical grid lines on all the different areas you think are good buying opportunities for any asset that you're looking at. And then once you finish with that, double click on any black part of the screen, and then we can test your theory to see if these lines are better. You could try these lines, compare it with the other indicator lines, and see which lines does best for you based off the indicator that you're looking at, and also the time interval. Don't be doing this on no 5-minute chart or no 15-minute chart. Do it on a weekly chart or a 2-day chart. And then from these examples, it seems that the second indicator was a little bit better, because it seems right here we're buying on the red. We're not buying on the end of the red or the transition. We're buying on the decline in the red. And that's not what you really want to do. You don't want to really buy on the decline of the red. You want to buy on the end or during the first transition after the red. And that will protect yourself from further losses. It will protect yourself from maybe buying too early. So that's why I like to use these horizontal lines in combination with these indicators. It just makes things easier and simplified for me, and hopefully it does for you. So the next and the last thing of this video, we're going to be going over your watch list on the right hand side of your screen. I named this YouTube tutorial because we just went over Apple on forward. So you'll just click on it, create new lists, name it what you want. I name my option trading. I have global, and then I have high value. In my options, I have Mirror, Riot, Intel, Silver, Snapchat, T-Mobile, Ford, and Apple. And then for my high value, I have MicroStrategy, Tesla, Square, JP Morgan, Nvidia, Facebook, Amazon, Google, Microsoft, Netflix, and AMD. And for global, I got the S&P 500, gold, the dollar. I have oil, silver, the 2-year yield. I got the Japanese currency, the Chinese currency, the Peruvian sole, the euro, the pound. And then for the cryptocurrencies, you have the Bitcoin, Ethereum, BNB token, Monero, BCH, AVAX, so on and so forth. You're going to have your own custom lists. You're not going to have my list. We're going to believe in different things, but I'm just showing you how it's supposed to look. You can have multiple ones. So in order to add something, let's say that we want to add Bitcoin. We're going to click on the plus icon where it says add symbol. Click on that. And then right here you see stocks, funds, futures, forex, crypto, indices, bonds, and economy. To make things easier, I'm just going to click on crypto because I'm trying to add Bitcoin. And I'm going to type in BTC. You don't have to type in BTC/USD because we're looking for Bitstamp. But as you can see in this example, this is USD Tether Bitstamp. I'm looking for Bitcoin Bitstamp. So just delete all that and just type in BTC, and you should see Bitstamp is the first one. Click on the little plus icon that says add to watch list, and bam, it's right there. And then the data shows up for you right then and there. I clicked on the monthly chart. Now I clicked on the 3-month interval chart. So now each bar represents 3 months. And you can see from 2011, July, October is the data that we're getting from this one. Because if you don't add the proper, ticker, maybe you add the Bitcoin from Binance instead of adding the Bitcoin from Bitstamp. Binance sometimes or other places don't have the full data or the full price history of an asset. You want the full price history. So the next thing that we're going to add is Ethereum. You're just going to click ETH and you should see Bitstamp, and you're going to click the plus icon and you're going to add it to your watch list. But for an example, I'm going to show you what happens when you click Binance. Maybe I should have did the example for Bitcoin, but I did it for Ethereum. For Binance, you have October 2015, and then for Bitstamp, you have you have July of 2015. So you have, a little bit more data when you have bits. So the next thing that we want to add after you delete that other Ethereum that you don't need, if you added it, we're going to add gold. So we're going to make sure that we're on all and not just on crypto. And we're going to type in gold. And then the gold that you're looking for on the right hand side should say TVC. And that's how you know that you're adding the correct gold. Should say money per ounce as well. Then you're going to add silver. Same thing, US per ounce, TVC. And now you have gold. Now you have silver. Now you have Ethereum. You got Bitcoin. And then if you follow these examples, you got Ford and you get Apple. And now you have your first watch list, and you can change the colors of these tickers if you want to kind of like separate them, put them in different categories if you would like, or you can just uncheck it and not add them at all. And right here in this little window, no matter what asset you're on, you can have all this important information like the days range, the 52-week range. You're going to have key stats. You're going to have a news. You click on the news and all the headlines pop up, and you can just click on any headline. Let's switch to Apple. Do the same thing. It tells you what the stock is. It tells you the days range, the 52-week range. You click on the news icon, brings up the headlines. Click on anything that interests you, and then bam, it shoots up right there. You can read about it. If not, exit off of it. Hit backspace. Scroll down. You got key stats. So much stuff. The market cap, the dividend yield, the volume. And then if you scroll down more, you have the earnings. How was the earnings, the past earnings, the dividends, if the stock even has dividends. Just have so much financial information that you can get from all these different types of assets. Then you can look at the different types of financials if you want to hit more. Overview, statements, statistics, dividends, earnings, revenue. And then you got the performance, the 1 week, the 1 month, the 3 months, 6 months, the year to date, the 1 year gains or losses, depending on the stock that you're looking at. The technicals: is it a strong sell? Is it a strong buy? Look at more technicals if you want. Look at the different type of time intervals: the monthly, the weekly. You got analyst ratings, even though you shouldn't give a shit about analyst ratings anyway. The point is looking at the price chart yourself, so you don't need to worry about the analysts. The only thing you worry about is this news. You have all this, the price target heading to 2024, the profile, the website, how many employees does this company have, and then at the bottom it gives a description of the company. It gives you the description of the CEO. It gives you the description of where the company is located. So it's so many different things that this site provides you, and so many tools. You just need to know how to use it, and also to be patient. One last thing I wanted to go over is the bar charts. As far as the bar charts, right now you should be using Heikin-Ashi, which makes the price movement, the first indicator at the top. It makes those bars look more smooth. Red is red for a while, green is green for a while. It smooths out the trend for you. But if you change it from Heikin-Ashi and you change it to candle, now it's not as smooth, but you also see a little bit more detail. You see if there's like a gap down, or you see if there's a gap up, like right there. When when a stock goes from one price and then the next day it shoots a gap. There's like a gap between the two candles. You can't see those gaps when you're on Heikin-Ashi. But at the same time, I like Heikin-Ashi because it just smooths out everything, and it just makes you a little bit more disciplined. You don't need to be shooting gaps and things of that nature. You just need to pay attention to the pattern. Thanks for listening and participating. If you got any more questions or concerns, leave a comment in the descriptions and I'll get back to you. Deuces!